Hello and welcome to another update video on Strategy Inc. We're here on the MSTR chart and the pressure still appears to be downward. I have removed the 61.8 retracement level from the chart because we don't need it anymore. This here gives us more clarity. We see very clearly that the market has reached the 78.6 retracement of the last rally here that started in April. Very, very deep correction, but absolutely, let's say, nothing unusual for MSTR. So this is a possible support level that we talked about in recent days and in weeks. Yeah, so the market is currently or has tested this critical support. Now, as we said before, with the break below this swing low here from the 25th of September, there is no indication that a low is in. There are really only a few more support levels, let's say, left that we can watch in this particular cycle. I shared with you guys a few days ago the larger time frame for MSTR here on the weekly time frame. And, you know, the $234 level roughly, yeah. Again, it's more precise on the smaller time frame, but this is a key level. This is the swing low, not only from April, but also from, I think, a few weeks before. So we had the April low, and then, yeah, in March also, the market tried to form a low in this region. See it more like a region. But obviously, this is a key spot. So once we break below, I think we're losing structural support, and the probabilities increase that we're already in a larger correction. For example, a larger degree wave 4 that could take the market in the next step towards the $158 level. I see this as a very relevant one, specifically this area between $75 and $158. But first of all, what we can do, we can add the VRVP indicator, volume profiles. And it's not that easy to see, but if I shift up here, you might see it better. Let's see if it adjusts. Yeah, not so well, but there is a spike in historical volume, especially in this area, $120 to $170. And that 23.6 retracement level, which is a larger degree Fibonacci level, is in between. And this is from this area of trading here. Yeah, this area of interest. There was a lot of trading activity there, roughly in this area around $158. And it's also where we have the previous swing high from February 2021. So I would say this is a relevant level. Yeah, this is a relevant level. We might see a test of it, but let's first see if we can get a break below $234. That is needed to confirm that. But obviously at the moment, I don't even confirm that we have topped. I actually like to see another high. The pullback from the all-time high is a 3-wave move down. It's not a 5-wave move down. And therefore, at least the door to higher prices remains still open. But I need to see some kind of a local low confirmed. It's not the cleanest chart. It's not the clearest chart. The problem is as well that the rally from the February low, or March low, yeah, is only a 3-wave move up. So from an Elliott Wave point of view, we always need impulsive structures. And that was quite easy to read until we had the all-time high in place. So until November 2024, you might remember before we were tracking this already higher. But since the all-time high was reached at around $510, and the market then formed the local low in February, March this year, the movements to the upside have become very, very choppy and messy. So we have to be a bit careful and be a bit flexible. Looking at the shorter time frame, you can still see that the market is operating in a range. Yeah, we're working on a range here. But below this level, and here, as I said, we can be a bit more precise here, at around $225. Yeah, below that level, we have an invalidation of any bullish pattern that I'm tracking here. Now, there will still be more bullish patterns available, but essentially, this is a range I'm working with. And in the range, we have $271 as support. Then I've got this yellow trend line below as support. And then this area around $224, $225. There is really not any other support level left. But as you can see, we have a small reaction. The problem is that due to the structure that we have here, it's possible that we're already working on the third wave to the downside, which would be very bearish. the bulls can only reduce the likelihood for that with a break above resistance, which is at $342.60, which is why over the coming sessions, we have to pay very close attention to this area around $342, particularly $342.60. Very important. That's resistance. And at the moment, we have to allow for a bounce into resistance. If it's a 3-wave move up, it's like the orange count. If it turns into a 5-wave move up, it might be white and we could move to new all-time highs. I definitely leave that on the table, that option. But it's the structure of the next larger bounce that will tell us likely the truth. And of course, we will pay very, very close attention to that over the coming sessions. Yeah, I'll definitely keep you updated about that. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates, make sure, you subscribe and stay tuned. Thanks so much. Bye-bye.